Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to be looking at 5G technology and what areas of the market will benefit more from this game-changing technology. And then we'll get into the Australian stock market so I can share with you my thoughts, where it's heading, along with answering all of your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we are Australia's most trusted stock market educators now. Before we move on, remember to show your support for our channel and hit that subscribe button. Now remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. The internet superhighway just keeps getting faster, and which has the potential to make our lives better and more efficient. Now, companies that have taken advantage of this growth have grown at staggering rates, like Amazon, Apple, Facebook, Google, just to name a few. Now, Apple has sold billions of iPhones since it launched back in 2007. And just a few short weeks ago, it released its first 5G phone, which opens up a world of possibilities for future applications. Now, whilst many consumers don't have full access to 5G, the technology really is here to stay, and over time, it will take over 4G. Now, by all accounts, 5G is a game changer, as it will allow many more applications, services and products to enter our daily lives, from providing high-speed camera surveillance in our streets to keep us safe, to doctors being able to view data, run tests and even operate remotely. Now, for investors, 5G will bring with it a new generation of products and companies that will prove to be very profitable. So where do you look for the next Apple or Google? Well, that's the million-dollar question, and one that we cannot answer easily right now, given that not every company that invests in the new technology will succeed. Now, even Steve Jobs in his early days of Apple could not have contemplated where his company would end up. Now, in my opinion, I don't believe telcos will be the companies that will benefit the most from 5G. Instead, it will be the smaller companies with entrepreneurial minds in the areas of education, financial management and health. That said, there are many other areas that are set to benefit from the rollout of 5G. Therefore, it's our job to keep our eye out for those that may just be game changers. So what were the best and worst performing sectors last week? Well, the market has been bearish with all sectors, ending the week in the red, with consumer staples the best, down just 0.05%. That was followed by healthcare, down 2.49%, whilst utilities, communication services and financials, they were all down over 3%. Now, the worst performing sectors last week included energy, and that was down 6.63%. Followed by industrials, down 5.98%, and consumer discretionary, that was down 5.52% last week. Now, looking at the top 100 stocks in the ASX, the best performers included Coca-Cola Amatil, which ended the week up 15.63%, following a takeover bid. Now, AMP also had a strong week, up 12.92%, followed by ResMed, up 8.47%. Now, the worst performers included Flight Centre, and that was down 15.84%. Oil Search, well, that was down 11.38%, followed by Aristocrat Leisure and Worley. Both of those were down 11% last week. So what do I expect in the market moving forward? Well, let's get into our charts for the S&P 500. All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, what an interesting week it was on our market last week. We saw that the US markets fall away, and so did ours. And whilst it's a bit later than I was expecting our lows to come in sort of in October. But I did say, it was probably 4 or 5 weeks ago, that I thought it could even go into early November, but I didn't think that was possible, but it has happened, and our market is looking a little bit bearish at the moment. So let's go and have a look at the chart and just see what it's doing and where it's likely to go this week. Now, on the screen, you've got a weekly chart of the All Ordinaries Index, and we can see here, last week's bar, if I put my pointer on that, you can see it closed right on its low. So its low was it's 6132.4 points, where the close was 6133, just 1 point higher, less than 1 point higher there than the low, with the high being 6415. But big move, 282.90 points for the week, looking decidedly bearish. And if we look here, you can see there it's just really gone back into that sideways channel that it's been on for so many weeks. I think it's about 26 or 28 weeks. If I put my pointer there, you can see there since the 19th of June, it really hasn't gone too far. It just keeps going up and down and around that sort of area, or that whole area there, and I'll show you how far that is, but it's not a lot of percentage moves, if that makes sense. So if I put my little tool on here and whack it between there and there, you can see there about 8% between those ranges. Now currently it's up under 3% since that 19th of June, but really you could go right back here to the 5th of June. So the last 5 months, nothing much happened on our marketplace, and a lot of people might have been struggling here with the market. Interesting thing in here at the moment is what will happen this week. I would expect the Dow was only down slightly on Friday, but the NASDAQ comp was down well over 2% on Friday. So we may see a little bit more weakness in our market here. But I think our market, if it does come down, it should, in theory, with what I'm looking at here, it should come down here through this 5,600 point level. There's the previous low here at 5951. So I think the market will go through there. It could end up getting down to 5,400, but I don't think so. I think it'll pull below 5,900 or 5,600. It'll go, 5,900, probably go to about 5,600 over the next maybe 1 or 2 more weeks, and then it'll wash out. Normally this low would be in the perfect time, and that's what I was saying back then about a month ago, saying the time was right for the low, but it wasn't quite deep enough, and that was my suspicion at the time. I was thinking it should have gone a little bit further, possibly down to this sort of 5,500 point level, but it just took off, and that was really just that 1 week. It really did take off back on early October, but right now I see a little bit more downside. I'm not suggesting the market's going to crash or anything like. I think the market still does look good, but I did expect saying that, do expect some volatility on the marketplace. October, anything can happen, and we know that from the past hundreds of years looking at the data, so we do need to be prepared for that. I still think the volatility could be around for another week, maybe a bit longer. We do have the US election Tuesday in the US, which will wake up Wednesday morning and start hearing all the news about that. I do expect a lot of things happening there in terms of not having a result straight away, lots of lawsuits, all sorts of other things going on, and a lot of conjecture. So we might get a bit of volatility through the following week. So that's why I'm saying we may be 1 or 2 weeks down. Maybe a little bit longer, but I don't think so. I think it's going to be a short, sharp move down to those levels that I talked about, but I still think the market is moving through into Christmas. But that's my take on the market at the moment. But let's get into your questions. Well, the first question we have today is from Adam, who says, "Hi, Janine and Dale. What I'd like to know is if you decide to sell your position, should you always sell your entire position, or is there ever a time where you would take profit and continue to hold a portion? I'm also wanting to complete your diploma in the new year. Is there a face-to-face version of your course offered in Sydney, or is it the course only offered by correspondence? Regards, Adam." Well, obviously there's 2 questions there, mate. First one is yes is the answer, but to explain it would take a lot of knowledge of technical analysis. Sometimes, depending on what we're trading, if you're trading things like highly leveraged products like FX or contracts for different those sorts of things, and you are highly leveraged, then there is a way to take profits from the market. The goal is to get your capital off the market as quick as possible. So you do that based on knowledge of strength and direction. So there are times you do that when you're looking at leverage trading. Generally, if you're trading for cash, the answer is no, and I'm saying generally, not all of the time. If you are in good profits, I know some people have said to me, I want to sell down some of my position here because I'm overweight in X stock, and my thinking of being overweight in X stock is one of these fallacies that we're pushed into believing by the big end of town. So I necessarily don't suggest that. If you've got a stock, and unless you put a massive percentage of your total capital into one stock. That to me is a sin of being overweight in one stock. For example, if you have $10,000 and you put 9,000 of that in one stock, that to me is an overweight. If you balance it out and have 10 positions of $1,000 and then one of those $1,000 positions, rises 500 or 600% to become 40% of your total portfolio, let's say some of the others don't do much, then that's not overweight to me. You're in profit for that $1,000. You're doing really, really well. So stay with that. Don't downsell some of that or take part profits of that. That's what I'm suggesting here. So, but it does take a little bit of technical analysis skills to understand where and what to do. So you'll learn that when you do the diploma. Sorry about that. When you do the diploma next year. We've never taught the diploma face-to-face. It's just not possible for a course the size of it is and what we actually do. It is what we call a flipped classroom course. It's very much, you get your face-to-face for all the videos, all the multimedia. We do live online seminars, and we've been doing those for 16, 17 years. But you also get your one-on-one support with our team of traders who will work with you all the way through the course. So you'll deal one-on-one with that. There's a lot of work and effort, I suppose, to put into it to go through it nice and slowly. Face-to-face learning is actually, I've had a lot of people say to me, I only want to learn face-to-face because that's the way I learn. And when I ask them, have you ever learned any other way? They generally say no. And I said, well, try the course. And there's never been a person that's tried it, got onto the course that haven't really loved what we did in terms of how we delivered it, the support you got, etc., etc. But the team can talk to you about that. I don't want to sort of drag on that question, but the team can talk to you about how it all works for you. Give the guys a ring, and if you want to enrol next year, then that's fine. Just get all your answers now. Now, the next question we have is a really interesting one here, and it's from Nola, and she talks about ETFs. Are they worth considering for medium-term to long-term investing? Now, I know we've covered that a few times in our live show. So on our live show that we do every Tuesday night at 7 to 8 p.m. every Tuesday. So if you look back, Nolan, you can see Jenny and I chatting about ETFs and ETFs versus stocks, whether you're better off one of those. The answer, or the question really is, it's about you. It's about how much effort you want or how much control you want to have. Now, ETFs on an index, I've always been completely against index ETFs. Anything like, an index on the All Ordinaries Index or an index on the S&P ASX 200. Because to me, you might as well just buy the top 10 stocks. You'll make more money over a 10-year period. It's just pretty simple if you buy and hold. If you want to be a little bit more active in your medium to longer term, if you want to take a bit more control, again, to me, direct share investing, picking the right stocks is a better way to go if you've got a little bit of knowledge. If you just want to be totally passive in that and you want to take on an ETF, then I don't have a problem with that. That's for you. If that makes you feel comfortable, then I'm quite for you being able to do that. Where I like ETFs is more for the particular areas that are unusual. And I talk about things like rare earths, or talking about maybe a technology one, or emerging companies, those sorts of things, because they're areas where take a lot of research, and you really do need to be experts that understand those areas to be able to put that ETF. They're the ETFs that I like, but anything index I don't really like. So hopefully that answers your question, but I would go back and look at some of the shows that Jenny and I have spent sections on. It's our main topic for the night, so please go back and watch those. They're on our YouTube channel, just like this video, so get into there. But I also wanted to bring up the charts at the moment. I want to show you what's going on the marketplace, because we actually didn't get any questions on stocks, or if people asking me to have a stock, and I don't think I've had that in 2 years till we've been doing these sorts of things. So what I thought I had on the chart is just showing you what the top 20 stocks are doing, because this is what drives the market. And so you'll see what I'm talking about here. And this is last week. You can see AMP was up 12.92 and Coles was up 3.26. So these are the big stocks. But you can see down the other end, South 32 down 8.5. And I really like South 32. And yes, it's got a bit more short-term weakness. That's okay. But longer term, medium to longer term, I do like South 32. So this is the area that I'm looking at for opportunities. Origin was down, Energy, Centre Group down over 7. So looking at these, you can see there's a lot of weakness through here. I expect a lot of weakness in the banks at the moment, and you can see that coming through. But if we go and look at the yearly basis of it, and this is where Buffett talks about buying doom, selling boom, and we've got the market moving forward. And if you look at the top end, people often will try and buy yesterday's returns, which you would have heard me say a lot over the last couple of weeks. So you can see people would be getting into Coles, possibly Wesfarmers, Woolworths and CSL, thinking, well, these are the better stocks, I'll get into that because they're rising. But to me, I find the opportunities at the other end here. So I look at the stocks that have been the worst performers in the top 20 for the opportunities to come in and buy those. So I'm looking at stocks like Origin Energy, Woodside, Scentre Group, IAG, Suncorp, Westpac, the banks, Telstra, those sorts of stocks to get into for my portfolio and for our students, because what goes down comes up and what goes up comes down. These are your top 20 stocks, so therefore these ones are likely to do well. They're not always going to go down. AMP is probably an exception on that one. AMP, whilst it did have a big week, you can see that last week, if I just zoom that up for you so you can see, if I just zoom it up so you can actually see where it is, you can see the big gap up that it did. I'm sticking right out of AMP at the moment. I wouldn't be excited about that big move up. It does remain to be seen. AMP gaps around, you can see a big gap through there, big gap through there. So it's likely to fall back down again, but it needs to do a lot more before it proves to me. But outside of that, these top 20 stocks, look for this, what's poor performing, because the rise will be there. I still think our market will do very, very well into 2021, and I still think it'll do better than the US market. Now, I do know I get a lot of people talking to me about the US market saying, well, it's better, there's more opportunities, you make more money out of the US market, and that is a fallacy. It's a complete fallacy. And I know a lot of people are sitting there going, Dale, you can't tell me that when Facebook does this or Apple does this or blah, blah, blah. Out of the FANG and WAC stocks, the Australian WAC stocks outperformed the FANG stocks in the US in the last year. That's what they've done. So, and they're always going to find good stocks in the Australian market a lot easier and a lot cheaper. And you do get these brokers promoting you commission-free trading and be able to trade the US market for, without paying commissions, etc., etc. But you do pay for it. There is nothing free in this market other than this video. But when you're trading, there's nothing free. Somebody's making money somewhere, and it generally comes out of the pocket of the retail investor. But anyway, but do have a look at those stocks in the top 20 stock market. Start getting your strategy together, because if always be prepared, and it's like the Boy Scouts, you need to be prepared for what's going to happen. Don't try and buy yesterday's returns, as I'm saying. So look at what's been going down over the last 12 months, because it's likely to turn and do better in the coming 12 months. Now, last week I did ask you a question, and that was, what's the one thing that you need to improve the results in the market? Now, I must say, we got a hell of a lot of different comments, from needing a time machine to gaining more knowledge, and a whole lot in between there. Now, the comment that I really liked best was one, and it was so relevant to so many, as it's one that we hear constantly. And this comment came from a gentleman called Fahad. I think it's a gentleman, sorry if it's not, who said, looking at the bigger picture and zooming out a bit, it's very easy to fall into the trap of thinking the market is bullish or bearish just by looking at the daily chart or daily market direction. And I'm aware of this issue, but it's very tempting to look at the markets every day now for me. Now, I guess it comes down to having the right mentality for it, as Dale was talking about in the video. So that's something I need to improve on, and I really do, it's really, really common, and people think that they've got to look at the market every single day. It's not. Actually, you'll make far more money when you don't look at it every day. And a lot of people are really, really surprised that Janine and I don't have live data. Like, we do not have live data, and yet people say they want to look at the live data and what the market's doing all day long. We had live data for a few years, and we just found it far more distracting for us in terms of our trading, and we make far more money when we're not looking at what the market's trading during the day. And the reason why is, are you more emotional, less emotional when you're looking at the market while it's trading? If you've got money on the market and you're watching green and red ticket goes up and down and pricing going up and down, are you more invested into that market and more emotional about it, or less? And the answer means you're more emotional. And if you're more emotional, that means you're going to make more emotional decisions. And quite often you'll get that wrong, because you'll see the stock going up and down. We teach our traders to make all their buying and selling decisions outside of market hours. Make sure you set them at solid points, and then you'll trade better with a lot less stress, a lot less risk. And you'll actually trade a lot less. The big sin that a lot of people do that watch the market on a daily basis is they trade too much. And that's the biggest sin in trading, or over trading is a sin. Now, like Fahad said, he's got into that habit. It really is, if you're having to watch the market on a daily basis, then your rules aren't correct. And some people will go, oh, geez, that makes sense, Dale. Other people will go, no, Dale, you're wrong. My rules are right if I'm looking at it daily basis. No, that wouldn't be right. Unless you're really highly leveraged and you're day trading, and people say to me, well, what if the market falls away? Or what if the market crashes today? It's really unlikely. The percentage chances of the market falling heavily on any one day is not high. It does happen occasionally, but it's not high. But if you have your stops in and everything else, there's no reason to watch the market. But I really would like to thank Fahad and everybody else for sending in their comments and their questions. So it really is nice. As I said, we didn't get anybody asking about stocks today, which is so unusual. But when people ask questions, it really does help everyone learn far more. So please do keep it up. And if you do have any questions you'd like me to answer, just stick them below in the chat there. But let me ask you a question. Do you think the market will be higher or lower than it is now by the 31st of December? And more importantly, why do you think that? So do you think the market will be higher or lower by the end of this year on the 31st of December? And why do you think it'll be higher or lower? Now remember that here on this channel, we do these Monday market reports every single week. And we also do our live stream every Tuesday night at 7 to 8 p.m. So get onto the Australian Stock Market show tomorrow night. Remember, hit the subscribe button now. Click the bell on the right of it so you know when we go live and we upload videos. I'm Dale Gillham here, the Chief Analyst at Wealth Within. Goodbye, good luck and good trading.